You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together because it's time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling, at least we tend to think so around these parts, and we're not biased at all, Options Insider Radio Network. Thanking all of you out there taking the time to not just drive up our bandwidth bills. TWIFO really coming on strong all throughout last year and continuing into this year. We appreciate all the new listeners who are out there discovering the show every week out there. Of course, those of you who take the time to rate and review, we do appreciate you as well. Clearly, there are many new people who are discovering the world of futures options every day, so your reviews help them beat a path to our door. Then, of course, if you want more of the nearly dozen programs on the network, not enough to satiate you, we get it. We know the hardcores are out there. That's what theoptionsinsider.com/pro is for. Head on over there, sign up. You will get nearly 200 additional exclusive episodes. We just looked at it the other day, listeners. There are literally days upon days worth of exclusive shows you can sit and binge at your leisure. Of course, you get access to pro Q&As every week. You get access to Options Oddities at the end of the week. You get exclusive early releases like we did Options Playbook Radio earlier this week. For next week, we did Options Bootcamp this week. You guys get all that early on the feed. You get live access to everything we do and a whole bunch more great giveaways. Just sent out a whole bunch of pro trading crates to all the winners out there. It was no small effort, but we're happy. We're happy when we see the smiles on your faces on social media. So theoptionsinsider.com/pro is the place to go to learn more. As we go on over to the CME hot seat, see who's joining us out there on the old program today. I'm pleased to welcome back our old friend, Mr. Tim McCourt, the Senior Managing Director and Global Head of Equity Products and now FX Products. His title keeps growing over there at CME. Tim, welcome back to the show, sir. It has been too long.
Great. Thanks, Mark. Always good to be here. How are you doing?
I'm doing well. It sounds like you're doing well. Your title keeps growing every time I talk to you, sir.
Yeah, things are great. Certainly happy to take over more of the business lines here at CME. Always exciting. Lots of good things going on here. And now I just get to be involved with even more of them, which is great. It's been great.
You know, FX, not traditionally one we talk about a lot here on the show, but that is starting to change. I will notice in the last, I would say, 3 months, we've talked about it more than we probably have in the last couple of years previously. So obviously all these headlines with the dollar and all the impact going on there suddenly starting to shake up a otherwise somewhat sleepy market, Tim. So I think might be talking a little bit more, me and you, just about FX. What do you think?
Sounds good to me.
All right, then let's keep on rolling right on into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what is lighting it up to the light side and to the dark side over there at CME this week. And it's a fairly evenly split week. We haven't seen this in a while. Lately, we've been biased pretty aggressively in one direction or the other. Some weeks it's hard to even put together a top or bottom five because everything is so concentrated in the other direction. This week, listeners, if you head on over to CME Group over there on Twitter, or if you follow us on Twitter, we will tweet this out for you as well. You could see the Movers and Shakers Report for yourselves. You'll see it's pretty evenly split, kind of reflecting the markets we have out there right now. We're selling off, we're rallying. Sometimes in the same day, things are moving and shaking and whipsawing all over the place, and that's, again, reflected over here in the Movers and Shakers this week. So, Tim, we have a pretty evenly split week here. Where should we begin our journey this week, to the light side or to the dark side?
I'm feeling pretty good. I'm feeling pretty out. Let's do the light side today. Let's start off on the lighter note.
I wonder why you're going to the light side. I wonder, Tim. I wonder why you're so intrigued by that one this week. Excellent choice this week. Let's go to the light side. Number 5, listeners. Our old friend Lean Hogs. I haven't talked about Lean Hogs in a while. So hanging out in the ags to kick things off for number 5 here. Staying in the ags, so number 4 with soybean oil up 5.32%. Number 3, now we're switching to energy, listeners. Our old friend RBOB. We know historically not a huge options player out there, but it's number 3 this week, up 8.79%. Number 2, still hanging out in energy, one of our trifecta of frequent offenders. Let's see if we can get all 3 on the list this week, listeners. One of those frequent offenders coming in at number 2 this week is Nat Gas, up 11.6%. Man, Nat Gas been all over the place of late. It had a 2-handle very recently out there. A lot of people were kind of wringing their hands, including us on the show, saying, wow, Nat Gas, come on, a long way to the dark side. We were just talking about 7, 8, 9, 10 handles and above not too long ago. So interesting stuff. It was number 5 in the same direction last week. Again, to show you how weak the light side was last week, listeners. It was number 5, up 0.41%. So not even a full percent was enough to get you in the light side. Everything was dark side last week. And then number 1, I think the reason, Tim, you chose this one, the number 1 light side offender this week, Bitcoin, Tim, up 13.36%. It was number 4 in the other direction last week, off 13.88%. So it's pretty much getting back what it lost last week. But Tim, did that have anything to do? Did that influence your selection at all?
Well, Mark, I do love all my products equally, but it was good to see it in the top spot. I'm not going to lie.
Yeah. Not the worst thing to have a couple of active products under your purview over there. All right, to the dark side now we go. And interesting stuff here as well, listeners. Number 5, back to the ags. It's rough rice here, listeners, off 2.41%. It was number 2 to the light side last week, up 2.05%. So rough rice kind of giving back what it made last week as well. Number 4, off to the metals. It's platinum, off 3.84%. It was number 2 to the dark side last week, off 6.8%. So rough couple of weeks here for platinum. Number 3, our other P metal, palladium, off 8.52%. Number 2, there it is, our other frequent offender. So to the light side, we had Nat Gas at number 2, Bitcoin at number 1. So that's 2 of our 3. And then at number 2 to the dark side this week, we have the third of our trifecta of frequent offenders. All 3 of these have been on the show, I think, pretty much every week this year. So that's kind of showing that we're setting up to be an interesting year. Number 2, lumber, off 9.66%. It was number 1 to the dark side last week, off nearly 14%. So lumber giving up the ghost over the last couple of weeks. What could possibly outstrip dead trees on our dark side list this week, listeners? It was oats, off 9.84%. So just squeezing, just barely making its way into the top of the dark side here this week. All right, Tim, we have a lot to get to in your purviews. Before we even get there, though, it's been a while since we've checked in with you and the team over there at CME. You guys just came out with your big earnings call, kind of breaking down all the numbers for last year. Whole bunch of highlights. A 19% increase in ADV from last year to a record 23.3 million contracts. ADV, of course, listeners, average daily volume. Terry was on the call, of course, and he said he put a lot of that growth squarely in our purview, which is options on futures. So we like to hear that over here on the TWIFO program. They say the growth also led by financial products, up 25% to an ADV of 19.5 million contracts. Options, also record ADV of 4.1 million contracts, up 23% from 2021, which was already pretty much a banger year. And then, of course, a purview you know a little bit about, Tim. Crypto, talking about how they're seeing a lot more action, record volumes in November. I wonder what could have happened in November. No idea. And then record large open interest holders, and that hasn't continued into the new year from November. Even SOFR blowing the doors off. At the end of 2021, the ADV was 277,000 contracts in SOFR. The end of last year, it was 2.1 million. So you're talking an 8x increase out there. So just crazy numbers across the board. Tim, anything you want to add out there on just some of the highlights you saw from last year across the board over there at CME?
No, it was certainly, Marcus, you said it was certainly a fantastic record year for the exchange. And when you look at some of those numbers, to me, the thing that is always inspiring about what CME is able to introduce to the market is the combination of new products. It's a combination of the products that have been out there for a while, and it's the combination of the product portfolio that we have. We have all the major asset classes, whether it's agricultural, energy products, financial, like equity and rates and interest rates and crypto. When you think about the totality of the product offering and risk management capabilities that CME offers to the market, it's great. And I think certainly when we look at some of the events of 2022, when we look at some of the uncertainty that remains on the horizon at the macroeconomic level, we have some sort of tensions between employment, inflation, geopolitical risk. All of these things really provide a backdrop that show the totality of CME Group's offering. And that's what we saw last year, and also a really good start this year here in 2023. We're seeing similar volumes at the exchange. So it's very exciting, and I'm really excited about what the teams have coming down the road here in 2023. And we'll see if 2023 can deliver just like 2022 delivered. But it's been a great year, and it's been great for the marketplace and our customers looking to manage their risk or deploy their trading strategies.
Well, Tim, as you mentioned, there's a lot of highlights, a lot of complexes to sink our teeth into on the show this week. But I think one of your purviews was topping the list this week. It was Bitcoin. So what do you say we start our journey in crypto this week, Tim?
Let's do it.
All right. Off to crypto, listeners. We go.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everyone. Welcome to the ever volatile, ever interesting world of crypto out there. You guys know where to go to sink your teeth into the reports for crypto, everything else we're going to talk about here on the show this week. CMEgroup.com/TWIFO, TWIFO is the place to go. Once you're there, since we're hanging out in crypto, listeners, you're going to go to that asset class drop down. Going to go down one slot. It's all alpha order, easy to find. And you're going to go to cryptocurrencies. And then from there, we can see where our journey will begin. But obviously, as I mentioned, Tim, at the top of the show, we saw a lot of action out there in the big dog, which is Bitcoin, up 13% here on the week. I know you guys had some interesting highlights over there on the crypto complex as well. Why don't you share some of those with our listeners, Tim, looking back at 2022? What were some of the takeaways on the crypto front?
Certainly 2022, exciting year for crypto, right? I mean, it's also hard to believe we've had cryptocurrency futures at CME Group for over 5 years now. You know,
that seems crazy to me. That seems like we just launched this thing and just started this whole thing, right?
I say it all the time. It seems like both a shockingly long and short time all at once, right? But 5 years old at the exchange. And we've come a long way since December of 2017 in terms of volume and product offering. And in 2022, our ADV, our average daily volume for the year, was about 54,000 contracts per day, which is great. That was up, about 13, 14% versus 2021, continuing to grow in terms of product introductions, where we now have Bitcoin futures and options, Ether futures and options, micro Bitcoin futures and options, micro Ether futures and options. We're adding expiries on the option side of things, cleaning up the strike rate. So all really great stuff. But what I was really pleased to see is when we look at the events of sort of November and onwards in the cryptocurrency space, CME's value prop of being that regulated venue offering regulated products. We were a trusted place for the market to turn to when they needed to manage their risk or they wanted to continue to access the cryptocurrency market, but wanted to do so in a regulated fashion. And we saw that with our single day record volume of the complex, over 207,000 contracts traded at CME for crypto on November 8th. We also had a large number of open interest holder record the week of November 22nd with 439 large traders. Now, as a reminder to everyone out there, that's those traders that hold at least 25 or more contracts in one particular futures. So the fact that we have 439 large traders speaks to the continued institutional and broad-based adoption of our contract. But what I was really pleased to see, on top of the volume growth, the open interest growth, is when we look at the number of new accounts coming to CME to trade crypto. Now, life to date over those 5+ years now, we average, call it about 440 new accounts per month on average come to CME. In November of 22, we saw that more than double, over 900 new accounts coming to CME for the first time to trade cryptocurrency products. And it didn't slow down. In January, last month, we saw over 700 new accounts coming to CME. So the fact that we have growing volume, growing OI, new users arriving at CME more than double the historic 5-year average in a time of broader stress in the cryptocurrency ecosystem is a great sign for CME and the value prop that we offer to the market with respect to managing their cryptocurrency related price risk, or wanting to use our products as the primary way to access that cryptocurrency exposure. It's really been exciting to watch, and I'm really glad to see the marketplace continue to turn to our cryptocurrency products at CME.
That's fascinating. You've seen that growth there because everyone's been beating that drum since November 8th, Tim, right? Oh, crypto's done. Crypto has had problems. People are backing off. I was just listening to my briefing this morning. When I first get up in the morning, the first thing I led with was banks are backing away from crypto. So all the narrative has been very negative since November 8th, Tim. But it sounds like you guys have seen a strong uptick there, which is a good sign, at least for the regulated side of the space, Tim.
No, absolutely. And if we just look sort of at January of 23 as a small window into that sort of broader trend that we're seeing and how CME is behaving a little bit differently, in January, our ADV was 35,000 contracts, and that was up 32% versus December. We did see sort of the slowdown in December, not a ton of volatility in the assets. I think the entire world took the last 2 weeks off for vacation. In general, things had slowed down, but the fact that we had such a resurgence in volume here in January, back up to that, 30 to 40,000 contracts per day was great. And the fact that it was across the board in the standard size Bitcoin futures doing almost 10,000 a day. We're looking at the standard size Ether contracts doing more than 5,000 a day. And then you have the micros in there also doing, great volume. The fact that it was spread across both contract sizes and both assets that we have, Bitcoin and Ether, I think shows the fact that people at CME, trading at CME, are increasing their trading volumes in January. They're increasing their open interest, and they're continuing to manage their risk and access the market in a way that's growing, which is certainly not necessarily what we're seeing when we look across the spectrum, across all the various spot platforms.
Now, you and I haven't chatted really since all that madness popped off back in November. I'm curious for you, walk us back to that week, that crazy week. It was FIA week of all crazy weeks to have it happen, right? And I remember walking into FIA at the beginning of the week and seeing them hurriedly scraping the name of FTX off the sponsor list. So I knew something was going on right there the second I walked into the conference. But obviously it was a crazy week. Obviously for you guys over there at CME and the crypto front, it was pretty crazy as well. Walk us through that really quickly. What were your thoughts as all this was unfolding back in November there, Tim?
Yeah, I mean, it certainly was interesting and wild to watch, right? As these things unfolded, the speed of which the information was coming to the market was something that our clients and us, the exchange, we're keeping a watchful eye on because, as you know, our number one priority is maintaining the integrity of our markets and making sure that our markets related to Bitcoin and Ether functioned as intended, and all of the controls and risk parameters we have in place were working as designed, and they did. So we were able to handle that 200,000 plus contract volume in a single day without incident, making sure the market preserved its function as risk transfer and primary venue for price discovery. All of the contracts cleared without incident. So it was really something that it was interesting to watch. But what was most important is we watched our markets and made sure our clients had all the tools at their disposal to manage their risk as that risk was manifesting in other parts of the ecosystem. I think it's also something that the days after that, again, our value prop remained true. If people really understood that regulation is a key feature of our offering, knowing the rules of the road, having that certainty and trust of trading on our platform has only increased in value with respect to some of the other spot offerings. So it's really interesting to watch. We're still watching and engaging with customers to make sure that we understand how this has played out over the last several weeks and months. Well, it seems that we might be through the most of it. We still don't know what might happen. So we're here, we're engaging with clients and making sure they have everything they need. But the most important thing is that CME remains a venue of choice for people to turn to, even during the turbulent times. And that's not just the story we have for crypto. That's been our story across all asset classes for almost the last 2 centuries. And it's something that's going to remain true as we continue to blaze new trails here in cryptocurrency.
Let's look at some of those new trails out here in crypto right now. Let's start with the big Bitcoin options. Listeners, again, go to that crypto drop down, go into indexes, and then Bitcoin here. You'll see a decently active week, actually. Remember, when these first launched, listeners, they were struggle to do 10 or 20 contracts a week. And now we're looking at, so far this week, almost 800 on the tape. The big dog, 26,000 calls. By the way, Bitcoin coming into showtime, 24,935. So obviously you mentioned catching a little bit of a lift, catching a little bit of a rally out there this week. Kind of interesting because in the past we've seen, Bitcoin in particular move very much in lockstep with the equity markets. It's been called in many ways just kind of a broad tech allocation in many senses of the word. Yet managing to rally this week, even as the broad equities have had a little bit of a challenge to do just that out there. So intriguing stuff out there. 26,000 calls. So not that far out of the money, leading the dance out there this week. And in terms of action last week, we also had a decent amount of paper hitting the tape out there. Nearly 1,300 contracts leading the dance last week. We had the 1,700 puts in June going up 108 times and the 32,000 calls in March. Talk about two ends of the spectrum all going up at the same time, but a lot of action there as well. And in terms of the micro, I know for a lot of you out there, listeners, the micro are where the action is. That's the more right-sized product for you out there. And still starting to chug along there. We're seeing close to 1,000 hitting the tape out there last week. More actually this week, which is kind of interesting. So a little bit more action on the tape out here this week. Looks like the big dog in the micros this week are the 25,000 puts in June, leading the dance out there this week. So again, a lot of action out there in June, and 25,000. It's pretty close to an at the money put now. So intriguing stuff out there. Tim, what are your thoughts on the growth rates? We've seen a surprising uptick in the big multiplier stuff recently. So it seems like some of the funds starting to come to play out there. For whatever reason, the micros are lagging behind a little bit. Some weeks they're hot. Some weeks they're kind of quiet. What are your thoughts on what's going on out there with the micros?
Yeah, it's a great question. So I think when we look at the micros, I think certainly when we look at the size of that contract, we are going to see a different personality in that versus the original sort of older sibling contracts here of the 5 Bitcoin and 50 ETH futures contract. And I think you're going to see that's going to follow more of some of the price action that we see on the Bitcoin and Ether reference rates and real-time indices. That's a little bit more designed towards that sophisticated, active individual trader. You might see a little bit more of scaling up and down of positions, more sort of getting in and out of the contract, being opportunistic as a function of price. So I think not surprising that slows down a little bit when the price is a bit stagnant and you see sort of, bits and bobs of activity when we do catch some price action intraday or intra-session. But, to your point, Mark, when you look at the larger size contracts, the institutional grade offering that we have at CME, those are continuing to do well. One, because that's certainly a more static strategy that we see being deployed by those institutions and those larger traders. But we also are continuing to see the developments in the interrelated markets. So think about structured products like ETFs. We not only have the futures-based ETFs on Bitcoin here in the U.S. That are continuing to grow in terms of inflows and shares outstanding. We also recently had the news coming out of Hong Kong that the regulator there approved ETFs based on the CME Bitcoin futures. So we're seeing those inflows from the structured products as more and more of their traditional participants are figuring out ways on how to use CME cryptocurrency products to enable their product offering to their traditional client base. And so we will see that activity sort of continue to increase in the larger size contract. That's what it's designed for, is to not only be a primary vehicle for people, but the underpinning of some of these ETFs out there. So I think that's giving a bit of different personality flavor to that activity that we're seeing in those contracts. And that's what's great about having multiple size products is we offer different ways for people to access the markets, to manage their risk. They could be precise if they want. They might be using micros to scale up or down their standard size contracts. So it's been great to see, but you're absolutely correct. These contracts have different personalities and something for everybody if they want to manage their risk or trade cryptocurrency price exposure at CME.
The last time you joined us, Tim, was back in September of last year. Coincidentally, it happened to be the day of your launch of Ether options. Funny how that works, Tim, huh? Just magically works out that way here on the show. But obviously the Ether complex continuing to grow out there at CME as well. I'm looking at the big Ether options. You can find these for yourselves, listeners. Swap out of Bitcoin, head on into the ETH. Doing decent paper last week, a little bit quieter this week on the big ETH options. But of course, we have more time to come. Interestingly enough, the micro Ether has kind of really been fascinating me for a while. I call it very much a staccato product. Some days it's really rearing to go. Other days they're kind of waiting and seeing what's going on out there in the market. That remains the case this week with a lot of paper going up. Nearly 3,000 contracts already up there in the micro contract. Ether, by the way, also rallying this week, up 186 handles or 12.2%, trading over 1,700 again. So quite the rally just from the start of this week. And as I say that 1,700 handles, the 1,775 calls going up nearly 500 times, expiring tomorrow that are leading the dance this week. So a lot of near-dated paper going up in these micro ETH contracts, but that makes sense. We had a big move this week. People want some gamma exposure in this product, so it makes sense to be piling into those, as well as the 18 half calls going up nearly 500 times this week as well. Those are going out on the 20th, so in about 4 days out there as well. So a lot of very near-dated paper. Looks like the micro ETH product, at least, Tim, starting to trade like an equity. All near-dated all the time, Tim.
That is certainly a trend that is, continuing to accelerate. Everyone loves the short-dated stuff, and they're loving it more and more. That is for certain.
All right, we can talk crypto for the rest of the show. Luckily for you folks, listeners, we have a whole show that does just that. It's called the Crypto Rundown every Monday here on the network after the option block, so you can check that out. If you are intrigued by all things crypto, as we keep on rolling, check out some of Tim's other purviews, including the equities. So let's head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everyone, welcome to the very topsy-turvy world of equities out there. You know where to go to find these listeners. Go on into that asset class, drop down, pop out of crypto, go down 2 more slots to equity indexes. Then in the product family, go to US Index E-mini. Then from there, it's an embarrassment of riches. We can start in the E-mini, but we can go on from there into pretty much any product that lights us up. By the way, since we're talking equities, let's set the table from a vol perspective. Coming into showtime, we had the VIX, so the vol of the S&P 500 listeners, right around 18.75, puts it down about 1.5 points from where it was this time last show. VVIX, so the vol of vol itself at about 85.25, down nearly 12 points. So that one coming crashing in since our show last week. Vol Q, so the at-the-money vol of the NASDAQ 100, right around 22.5. That's down about 3.25 points from last show. That puts that VIX to Vol Q spread at a little bit shy of, where are we looking at here? Yeah, it's like about a little over 3 points, so almost 4. So that puts it about 1.78 points tighter than it was this time last week. All right, a lot to unpack here. Tim, Equities been a very action-packed complex to kick off the new year. People were wondering coming into the beginning of the year, I don't know, things are not looking good. We're expecting bad earnings, expecting bad news from the Fed. And the equities have done pretty much naught but rally since the beginning of the year. Last week and change, they've kind of been treading water, but intriguing stuff, very topsy-turvy, a lot of intraday whipsaws. What's been catching your eye out there in your other complex, Tim, of equities?
Yeah, certainly. I mean, when we came into 2023, I think some folks thought that the market might take its collective breath, or we're going to see some mean reversions in volume. And while we maybe have seen a little bit of that on the future side, certainly not on the options side. I mean, options are continuing to rock and roll. I think when we have sort of the intraday movement, sort of vehement disagreement on what the macroeconomic numbers mean as they're coming out intra-session, it's something that is continued in a pleasant way to provide the velocity to these markets. When we look at our option growth, 2022 was a great year for our equity options on futures here at CME, doing 1.2, 1.3 million contracts a day. And then we saw the same thing happen where we haven't slowed down in January and February. We're seeing about the same in the option volume, which is great. And it's something that remains useful for people, especially when looking, for those that still might not be familiar, when we look at the option on future style, the great thing is when you look at these short dated options is that it expires into the future. So you have sort of this seamless delta event at expiration, which makes them a great tool for some of the intraday trading strategies, the shorter dated trading strategies. It settles right into that future at the end of the session, which is great in terms of maintaining that exposure. You don't have to worry about replacing all of the delta as the indices are whipping around more and more into the close. So it's a great tool. It's something that customers have found really helpful here in 2023, and something that we're continuing to engage with customers on as we continue to roll out products in the option space to meet the ever-evolving needs of our clients.
Yeah, Tim, I'm not sure if you heard, but no one trades beyond a day anymore in the equities. It just doesn't happen. It's crazy. If I had told you at the beginning of this time last year, Tim, if we were getting together early in 2022, that a year from now, all these products on the S&P and all the major index products, the lion's share of the volume would all be going up within pretty much the same day or within 24 hours of the trade date out there. You would have said I was a crazy person. Yet, for whatever reason, it seems like the adding of those last 2 days, Tim, because they already had 3 of them. They already had most of the days to trade throughout the week. It wasn't like there were no weeklies available. There was quite the selection of weeklies already. But for whatever reason, filling in those last 2, it seemed to just awaken so many new people, retail, institutional, to the onset of this whole 0-day phenomenon. And now it's like a tsunami, Tim. We can't escape it. It is inescapable out there in the equity space. And it's kind of transforming everything. It's making people take another look at volatility and how it performs in the equity space, because none of our vol measures were ever designed to accommodate for same day trading. So it makes
absolutely.
It's just shaking everything up from a year ago, Tim.
No, it's wild. I mean, Mark, when you think about it, go back a few years when we were talking about the advent of Mondays and Wednesdays. And I'd be remiss to say, I think, the market was almost demanding, please don't go to Tuesdays and Thursdays back then. And we've certainly come a long way, where we've introduced the Tuesdays and Thursday options in the E-mini S&P. In October, we expanded it to NASDAQ. Later this month, on the 27th, we're expanding it to Russell. And it's insane to watch, right? So we now, if you think about it, we have at any one day in the E-mini S&P options, we have over 60 expiries for people to choose from. That's effectively daily coverage for the next 5 weeks on the S&P 500, and people can't get enough of them. When we look at 2022, our same day expiring, or people love to call it 0 DTE, 0 days to expiration, we're doing about 242,000 contracts per day last year. Just a few weeks into 2023, we're doing almost 315,000 same-day expiring options, which is about a 30% increase in these 0 DTE options. It's amazing, but I think not necessarily surprising when you step back and say, what was always some of that benefit that the Mondays, the Wednesdays, the weekly Fridays provided to the market? And it was really just increasing the precision of how people could manage their options related risk or use options in their portfolio, where they didn't want to overpay in terms of theta. They didn't want to overpay for managing event risk that may be happening today by trading a Friday option or a Friday option of next week. And that just really remains true when I think you have a raising rate environment. Theta is becoming more expensive. When you have more volatility in the market, the cost of hedging the delta associated with your gamma profile is increasing. So it's not surprising that we got here, but it is surprising at the amplitude of how fast we got here and how much people are doing. It's really been interesting to watch, and I don't think it's a trend that's slowing down, that's for sure.
No, it does not seem to be slowing down at all, Tim. It's just fascinating to watch because you're right. I've talked to so many people out there who've pretty much transformed all of their trading. They are exclusively now zero DTE traders. They've used it to replace a number of different things. Maybe they were using futures in the past for something, or a volatility product in the past, and now the zero DTE has kind of usurped all of that. So I've said many times, we're kind of just in the early innings of this stuff, and we still don't know what all the other shoes are going to drop as a result of so much of the liquidity and so much of the paper just fixating on this very, very near-dated window here. It's fascinating. It's kind of unanticipated, as Tim mentioned, when they launched the other days of the week. The prospect of doing the full week was kind of met with some skepticism, and now here we are, not that long after, and everyone and their mother and I think their grandmother are all trading these things right now. It's just a fascinating time, listeners. And again, we're only just in the early innings of it. Speaking of fascinating time out there, let's go out to the E-mini S&P 500 right now, listeners. See what's going on out there. 4140 is about where we're hanging out. So starting to rally it yet again today. This is like the third day in a row. We've seen aggressive sell-offs to start the day. And then the buyers come in and keep trying to drive it back up to unched on the day, if not positive. We were below 4,100 earlier this morning, so they've rallied it almost 40 handles already. So a lot of action out there. How much paper on the tape this week, listeners? 3.1 million contracts, so nothing to sneeze at out there. All this whipsaw movement, all this concerns about the Fed, the endless parade of economic numbers, all of that feeds into a lot of interest and a lot of paper out there at the end of the day. Of that, about 27%, as you would expect in any good equity these days, is going away tomorrow. So, again, a lot of those measures we usually look at, vol, skew, all that stuff, are kind of meaningless with such a short window to look at, listeners. But intriguing stuff nonetheless. Let's get out some of the paper that is actually interesting. And again, you have your usual slew of people picking up nickels in front of the steamroller, 35 quarter puts. Very active this week, 42,000 of them. Last week, 24,000 of them. So, all kinds of paper there. Let's scroll past that a little bit to get some actually economically relevant paper. And there actually is a lot of it this week as well. The 4,100 puts going out tomorrow, listeners, going up nearly 40,000 times this week. And they were in the money this morning. Not so much now, but hey, give it a few minutes. You never know we're going to close here at the end of the day, listeners. But very active all week long. The big day, obviously, today. So you know what? That dipped down below 4,100, obviously driving some paper today. Nearly 17,000 contracts on the tape today. The rest of the week kind of back and forth. Monday, only 3,500. Tuesday, nearly 10,000. 7,700 yesterday. And then today, nearly 17,000. So total of nearly 40,000, about 38,000 on the week. Back and forth opening to closing, as you'd expect, as we move closer to that strike and then move away from it. But it's not all puts all the time, listeners. How about 4,200 calls? How does that sound? Also pretty active this week. Also expiring tomorrow. 34,000 of these going up this week. The big day for those was Tuesday. 13,200 on Tuesday, 8,300 on Wednesday, 7,200 today, 5,000 on Monday. Pretty much opening all week long. So a lot of opening paper. What would you rather have on that strangle or risk reversal, listeners? We're hanging out at 4,140, so we're almost midpoint. You got the 4,200s or the 4,100 puts going out tomorrow. Pick your poison out there. We go a little bit farther out, see what else is trading out here, listeners. And also the 4,000 puts. These are going out in an eternity. These are 12 days. That's might as well be another century from an equity options perspective these days. Doing 32,000 as well this week. We were talking about this on the option block last week. Folks piling in to, I think it was the 4130 puts last week. A lot of attention on what's going up out here on the options on the E-mini over here at CME. And looks like the 4,000 puts taking the lead this week here with 22,000 going up today, listeners. 22,000 4,000 strike puts. So forget the 4,100s, all the way down to 4,000. Then we have 6,000 yesterday, 2,700 on Tuesday, almost 2,000 on Monday. So right around 3,200, or shouldn't be 32,000 going up this week. So a lot of paper here on the 4,000 strike as well. So good to see a lot of, shall we say, near at the money, interesting kind of paper lighting it up out here. We can obviously spend a lot of time looking at all the fun stuff. You know what? That's not it, listeners. All the way out to March, 39.5 puts. So that's almost 30 days. That truly is an eternity in the equities right now. Going up 39.5 puts, going up 32,000 times this week. So that is nothing to sneeze at out there as well. Listen, that's impressive. Actually, right in line with what we were just talking about. Could be maybe, no, it doesn't look like a roll because it's not all going up today. It actually went up. Most of it was on Tuesday. 24, almost 25,000 going up on Tuesday. 2,200 on Monday, 1,800 on Wednesday, 3,500 today. So a lot of action, a lot of opening paper on the March 39.5 puts on Tuesday. Again, as we're whipsawing all over the place, listeners, it's interesting to see all these different strikes just lighting it up across the board. All right, we could we could spend more time here in the equities. What do you say, Tim? Do you want to hit another equity product, or should we roll on to one of your other complexes? Maybe FX you got under your purview.
Yeah, let's switch it up. Let's move over to FX. Do it.
I think we can make that happen. Strong dollar, how's that impacting the FX space? Let's find out, listeners. A little bit of the old FX.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, everyone. Welcome to these days, very fascinating world of FX. Last year wasn't always on our tape, but actually this week, if we expand our bottom five, if we go out to, let's go about to a bottom seven, we'd have the yen USD there off about 2.1%. So FX is lurking right around the periphery of our vision these days, listeners. And it's starting to make its way onto the show more and more, which is, again, always fascinating. You know, for a long time, this was kind of the land that Vol forgot. But these days, again, strong dollar, so many international trade disputes going on, all of that accretes its way back to the FX complex at the end of the day. You know where to go to find it, listeners. Again, go to that same drop down, pop out of equity indexes, go down one slot to foreign exchange, and we'll hang out in FX majors. Before we do that, Tim, obviously, this is one of your newer purviews over there at CME. And again, like I mentioned, not one we get to talk about all the time here on the show. So let's start there. Give us some of your highlights and takeaways from the FX complex last year.
Yeah, certainly. FX had a record on the futures front and sort of a near record on the options front. And what we've really seen, I think, on the FX side is after several years of historically low, and for lack of a better word, non-existent volatility, we've certainly seen the volatility come back in 2022. And I think that's both a function of and sort of enhanced by the interest rate differentials we're seeing between the various currency pairs. You're seeing sort of disparate policy by the various central banks across the globe. And that's going to manifest in different yield profiles and interest rate differentials between the currency pairs of FX. So that's certainly what we're seeing, where you had sort of the appreciation of the dollar strong in Q3, reversed in Q4. Where sort of the non-dollar currencies rallied a bit against the dollar, but then you had a widening interest rate differential. So all these things coming together really makes FX very interesting to trade. A lot of action that we're seeing sort of in the major top G5 currencies, and that's also being manifest in options. When you have some of these interest rate differentials, a great way to play that further out the curve is various option combinations and strategies. So I think we're seeing a lot of both individuals as well as institutions revisiting their FX strategies. And in this type of market, it's really become exciting when you're doing either sort of single currency trading or trading some of the currencies against each other. We're seeing lots of interesting strategies manifest in the market. It's been a lot of fun to watch the last few quarters for FX.
Did you notice, as obviously the dollar making a lot of headlines last year, a lot more customers that maybe wouldn't traditionally have cared about FX, wouldn't really be interested in that complex, starting to light up and express an interest in the FX complex, Tim?
Absolutely. So when you think about it, both from even, let's say, an institutional or a buy-side perspective, we're seeing more and more clients turn to FX futures and options to manage our risk, but also even some of the individuals. It's a great asset. One of the things we've actually seen, interestingly enough, if you connect some of the dots we're seeing as some of the volatility came out of, say, the cryptocurrency market, we actually saw some of those traders turn to the traditional currency markets because it's not that different of a way you sort of trade, whether it's Bitcoin dollar or euro versus dollar. They do have some similar characteristics and ways that people could trade those strategies. So we also, as volatility, as people look to chase volatility to enhance their returns or the velocity of their trading strategies, we did see people turn to FX either for the first time or the first time in several years, given the volatility profiles that were emerging.
Let's go check out some of those profiles right now. Listen, I mentioned Yen USD. That's an interesting one, but obviously Euro USD is kind of the starting point for most people when they come into the FX complex. It's the volume leaders. I think we're going to hang out there. Where is Yen USD right now? Almost 1.07, 1.0691 to be precise out there. And so actually it was like slightly off to unched on the week out here. It's not a big underlying movement week, at least net right now. For Euro USD. Doing some decent paper, though, about 53,000 contracts on the tape. And unlike an equity, it actually trades a little bit beyond today. Looking all the way out here to March, that's where about 42% of the paper was going up this week. So we're going to hang out there. What is the vol? You may be wondering in Euro USD. And again, this has always been one of the refrains people always use to push back against trading FX for so long. It wasn't really a bastion for volatility. And that's the case again this week. Coming in pretty hard, actually. Down to about a 720. That's down nearly 1.8 handles. So we were at a 9 last week. Now we're at a 7.2. So vol coming in already at a low level. Now coming in nearly 2 points. So vol, not exactly the thing to be found out there. But nonetheless, folks are trading it up out here. Looking at the skew out there in March, the puts last week, 5.4% bid. This week, 6.2% bid. And the calls last week, 2.4% cheap. This week, 4.4% cheap. So the calls getting cheaper. The puts getting more expensive from a vol perspective. Kind of interesting, very reminiscent of an equity skew that we see out there. And in terms of the most active contract, looks like the leader out there was, no surprise, I said we're at about a 1.07. It's the 1.07 puts leading the dance, doing nearly 5,000 contracts this week, about 4,400, almost all of that going up on Wednesday. 3,600 on Wednesday, all that opening. The rest kind of scattered throughout the week. So a lot of action on Wednesday on the 1.07 puts here in March. In Euro USD. All right, behind it, we have the 1.09 calls, trading about 3,800 times this week. Almost all of that going up on Monday, 2,700 on Monday. So again, kind of interesting patterns to the paper out here, popping up on different days. The rest of the week, kind of light out there. And then behind that, looks like we have to go all the way back to the near-dated stuff, the stuff expiring in about a day. So I lied when I said it was all longer dated. There is some near-dated paper. It's the 1.09 puts going up nearly 3,000 times this week, 2,940 times. All of that on Wednesday. It looks like that was all closing. So somebody bailing on the 1.09 puts there for size on Wednesday and taking a good chunk of the OI with them out there. So intriguing little pockets of liquidity, listeners. Let's go a little bit farther out, see if you see anything else interesting. I got 1,000 lot of the 1.015 puts going up out here in the March monthlies as well. Those have about 28 days to go. And about 1,500 of the 1.09 calls going up out there in the weeklies in April. So kind of scattered paper. Actually, I buried the lead here. If we go all the way down here to June. So that's a long term. I'm not practicing scrolling that far down anymore, listeners. It's so much near-dated paper. That's scrolling all the way to June usually is useless. But June 1.08 calls doing 3,600 contracts this week. All of that on Wednesday again, and looks like all of that closing. So someone taking off the very near-dated 1.09 puts earlier this week and coming in on Wednesday, taking off the 1.08 calls as well. So a lot of closing paper out here this week in the Euro USD. Tim, any other highlights from the world of FX you want to share with us, or should we get on out to the listeners, sir?
Let's get on out to the listeners.
All right. Listeners, it's that time. Listeners, it's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. But the whole show is your show, obviously. But this segment, you guys take the reins with your questions, comments, insights, pearls of wisdom. Let's start it off, actually, with the question we asked you folks last week. Tim, I'm not sure if you're going to like the results of this one, but it's an interesting one nonetheless. In honor of your appearance, we asked them last week a crypto-related question. We said, if you had to buy a 10% out-of-the-money call expiring at the end of the year on one of the following crypto assets, which one would you pick? We gave you three choices and a little bit of an out there. We said Bitcoin, ETH, Solana, or you're just done with crypto for right now. You're washing your hands of it. And Tim, it was a back and forth contest. Bitcoin was leading it, but at the end of the week, it came out with exactly a third of the vote, 33.3% saying they're done with crypto, followed by 30% for Bitcoin, 20% for ETH, and 16.7% for Solana. So I guess you can look at it two ways, the glass half full or the glass half empty, Tim, because a third of them say they're done, and that's the winner. But if you add up all the rest, 2/3 of the audience is back in on crypto. So I guess it depends how you look at it, Tim.
No, absolutely. And I think just like anything, I look forward to that third changing their mind and coming back in, and we'll see them in a few months. I think the one thing we've learned about the crypto community over the last few years is they are resilient, and they'll be back. But I understand, it's been an interesting market. There has, like we said, even notwithstanding the last 2 weeks, there hasn't been a ton of trading action because it's been a little bit range bound, or a lot range bound, we should say. So I think they're done. But the one thing I take away is they're done for now, not for good. So I'll see them in a few months. And great to your point to see 2/3 of the listeners still get involved, and Bitcoin and Ether kind of collectively leading the pack, which is no surprise. So great that we have lots of interesting and great and suitable Bitcoin and Ether products for them here at CME to get involved in.
Let's go out to our live listeners, Tim, on the pro side. We got a live question coming in from you here for Options Queen. This goes back to what we were just talking about with all of the unknown unknowns from so much paper going up in the zero DT phenomenon, Tim. She asks, does Tim think the massive surge in same-day contracts is having an impact on intraday volatility in the equities? This is one of the other questions we're getting a lot, Tim. People want to know the impact on things like VIX and all these other metrics that weren't designed for it. But another question we're getting a lot is, we are seeing a lot more whipsaws these days, Tim. Is that just a coincidence, or do you think maybe some of that blame can be pointed at this explosion of same-day trading?
That's a good question. I don't necessarily think it's a product design feature of zero DTE that is sort of amplifying or exacerbating any of the intraday swings. To my comments earlier, I think it's actually the opposite problem that we're having, or I shouldn't say problem, the opposite impact that it's having. And that is, we are seeing, let's look at the recent, CPI numbers. Like, we're getting a little bit of different reactions from different people, whether it's the change month over month or the change year over year. And you look at the market swings and the volume swing up, it's like half the world hates the news, the other half the world embraces it, and they're vehemently disagreeing with each other about what this means for both short and longer term outlooks on the market. And we're seeing them sort of battle it out as they look to transfer risk and trade with each other. So I think it's the news itself, whether it's the fundamentals, whether it's earnings, whether it's macroeconomic numbers coming out, whether it's employment, CPI. We look at, people seem to sort of be digesting and shrugging off the the geopolitical issues, but they're still out there. So I think all of these things are manifesting throughout the day and just causing different reactions. I think it's great that we have risk management tools such as zero DTEs that people can more precisely manage and position around it. But I don't think it's structurally the introduction of these products that are sort of amplifying intraday volatility. I still think that's everything else going on in the world and the market that's driving that more fundamentally, is my viewpoint.
Well, you did it, Tim. You survived another one. Well done, Jeff. Fun in the old hot seat today?
Oh, it's always fun. It's been good to be back in the hot seat. Yeah,
yeah, it's been a while. It's been since September. A lot going on. Speaking of intraday volatility, it's like we're kissing 4,100 again, Tim. So we're whipsawing all over the place. So whether it's 0 DTE or 8,000 other things, which it could be, something's driving us all over the place these days, right? So fascinating times. I got a feeling, Tim, with all the new products you folks are rolling out and all the new complexes you're adding to your business card every week, you and I will be chatting again fairly soon, sir.
I look forward to it, Mark.
Well, before we go, Tim, we obviously hit on a lot of stuff already here on the show, but if there's anything else you want to leave our audience with, I know we like a little hint, a little tease here. So if you got any of those up your sleeve in terms of new stuff you guys are thinking about rolling out in the coming months, you want to drop that for our listeners, have at it, or maybe just some general things our listeners should keep an eye out for over there at CME. Now is the time, sir.
No, absolutely. You know, as I said earlier, we have Tuesdays and Thursdays coming out later this month on the E-mini Russell options, which are great. So stay tuned there. Yesterday, we also issued the press release around Bitcoin event contracts, or anyone who's interested in those, as well as all of our other product announcements and educational resources. Head over to cmegroup.com for all the latest and greatest information. And like I say, you know, we have rolled out lots of great things, starting to run out of ideas. So if all your listeners out there, keep those product ideas coming. You know, send them into Mark. Mark can always get in touch with us at the exchange. You guys have been a great source of inspiration for all things we should be focusing on, and keep that coming. We're all ears.
I think we got it, Tim. I think we got 0-day lean hogs. How about that, huh? So that's going to be hot. It's going to be huge.
Yeah.
That'll be your next thing. Next thing you come back on the show, you got all the fun out there in near-dated lean hogs. If you want to see the fun for yourselves, listeners, throughout the week, not just on the show, these reports are running for you all the time, 24/7. You know where to go. cmegroup.com/TWIFO. TWIFO is the place to go to begin your journey into lean hogs or whatever other product floats your boat. We don't judge here on the show. That's going to do it for us on the broadcast side today, listeners. But don't worry, back again tomorrow, noon Central, 1 p.m. Eastern, for Vol Views. Back after that for all you pro folks for Options Oddities, breaking down a wild week, clearly, on the unusual activity front. So should be a lot to get to on that show. Then back again next week on Monday, kicking it off with the option block all the way through to next Thursday and another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.